All right, we turn our attention now to commodities. Gold is off its record highs as investors sell to cover losses, perhaps, in other markets. Well, our next guest says it's not inconceivable that gold could go to $2,000 an ounce by the end of the year. David Stroud is the chief executive officer of TS Capital Partners. It's a hedge fund that specializes in trading commodities, and he's a frequent guest here at Fast Forward and Bloomberg just in general. You've been giving us some great notes over the past week, David, giving us a lot of inside scoop on what is happening in the markets. Tell us, what is going on? Let's start with gold. We got to pick a point because we could be here all day talking about the markets.
I think what started our conversation this week was and what brought got my attention was the volume in gold. Gold was trading 8, 7, 6, 5 times its normal volume starting on Monday, and that's not normal. The markets weren't gyrating quite as much, but gold was trading. In other words, people were buying. People bought about 20 days worth of gold in a span of 3 days, which that's not normal.
Now, who's buying it, and why do you think that happened? I mean, you wrote a lot of notes for me that were quite fascinating. Where's this money coming from?
Well, it appears that over the past 4 days, and we just found this out this morning, actually through some of the research that Bloomberg did, was the gold ETF was the main purchaser. As good of the information as that we can get, it was the gold ETF that was buying the majority of this, but so are central banks, so are pension funds. There's a pension fund in Texas, an endowment that bought, I'm not sure what the figure was, but they're looking to raise, instead of having 1% of their money in gold, to have 5%. So it's really, in a lot of cases, it's underbought, as crazy as that sounds.
And for a foundation of that size, obviously, that's a big number. Let's talk a little bit about gold versus other asset classes, because a lot of people look at U.S. companies. We've had 72%, I think, of companies in the S&P 500 beat earnings estimates, right? That's better than the historical average by about 10%. Yet no one seems to want to own a U.S. company today. But gold trading off a little bit today, but after the run-up we've seen, this is hardly a sell-off in gold. So why gold versus U.S. equities when companies seem to be doing so well?
Well, because you can put your hands on gold. You can put your hands on a lot of these commodities and to shift them. My probably personal favorite, because it's the most undervalued of all the commodity areas, is agriculture. The world is growing. We're going to be at 7 billion people. I think October of this year, we're going to reach 7 billion people. And it's only climbing. And we still, for the majority of areas around the world that farm, the agriculture is antiquated. So it becomes a question of, do we have enough water for the crops? Do we have enough crops for the people? And I think that's going to be more of a panic as time goes on. And kind of to move back to gold, we have to remember its stepsister, silver. Silver prices would have, when we look at gold versus silver, we feel like silver prices are going to enjoy more of a gain over the next
Silver is down to 60. I'm looking at spot right now to right under $40 at the moment. Given where the gold and silver ratio typically trade out, what does that mean for silver prices?
So if you look at if you bought 40 ounces, it takes 40 ounces of silver to buy 1 ounce of gold. Price per pound, if you will, if you'll excuse the analogy. If you go back to the ratio the ratio of silver to gold in the 80s, then you can imply a price of about $80 an ounce for silver. Silver actually, and these numbers are going to move a lot because they've moved quite a bit today, but as of yesterday, silver was up 17% year to date, whereas gold was up about 10% year to date, so it has outperformed.
Wow. Do you think silver, though, will get to that $80 mark?
I think it will. I think by the middle of next year, silver will be sitting at around $80.
All right.
Because people are going to, you can only buy so much gold, and you're going to look to find an alternative to that. Silver's a perfect alternative.
David, always appreciate the insight you offer us. Unfortunately, we got to leave it there. That was David Stroud, CEO of TS Capital Partners. Watch out. Gold $2,000, silver $80.